welcome back to Liquid Lunch. Hey, who was that musical artist there, Ahmed? Brenda Earl. You know who that is?
No.
Brenda Earl is Catherine McDonald's sister.
Who's that?
She. I'll pretend I didn't hear that, Marla.
Well, you don't know half the people I mentioned. Who's Catherine McDonald? Any relation to John?
John McDonald?
Yeah. The Prime Minister?
John McDonald.
Sir John A?
Yeah.
Probably. Because all the McDonalds are related at some point.
Yeah.
Yeah. Except for Ronald McDonald.
Well, there you go. And then again, you never know.
No, you never. You know what they have at McDonald's right now? They have a something called a McDouble, for $1.39.
Is it a hamburger?
Yeah, it's a hamburger with 2 patties and a piece
What's
of
the
cheese.
difference between that and a Big Mac or a double cheeseburger?
The double cheeseburger, which is $1.69, has 2 pieces of cheese, whereas the McDouble only has 1 piece of cheese for $1.39. But I think it's worth it. I don't need that much cheese.
Difference? You don't need that much.
You're getting a piece of cheese.
Believe me, the
You're
piece
paying
of
30
cheese
cents
is
for a piece of
pretty
cheese.
minuscule.
And you're already
It's
getting some
1/100
cheese
of an
anyway.
inch.
Exactly. So I'm going for the McDouble, $1.39. And I'm saying that with conviction.
Do you
Marla.
really like McDonald's hamburgers?
For $1.39, every once in a while, I'll take one. Absolutely.
Well, you know what's best is the buns.
The buns are the best.
Yeah.
Why?
I don't know, they just taste so fresh.
Do they really?
Yeah.
You know why?
I don't know.
Because they have a lot of turnover.
Oh, yeah.
You know, because they're always,
Do you think their hamburgers have a lot of turnover?
yeah, there's a lot of turnover in those
Their
hamburgers.
French fries have a lot of turnover, too. In
That's
fact,
right.
all of their food has a lot of turnover.
Yeah, because they're so busy all the time.
Of course, but they're making things in mass quantity, so they have everything lined up so they can serve people faster, so things are sitting around under lamps.
They have a whole institute of hamburgerology. They teach people how to do all that. It's all a science. It's a whole science.
You know what I like at McDonald's, and I haven't eaten there in probably 20 years?
What?
Is filet of fish.
Interesting. Yeah, the filet of fish is not a bad sandwich.
I think it's delicious, and that bun is different than the hamburger bun.
Is it really?
Oh, totally
I didn't even know
different.
that.
Totally.
Are you sure? Are you sure it's not just the
No.
special sauce?
No. No.
We should send this to McDonald's. They should pay us.
Yeah, really.
I'm getting hungry just talking.
Is there a McDonald's around here?
Yeah, there's one at the food court.
Oh, yes,
You-
the food court.
the weird-
The favorite place where you like to eat.
Yeah, you know what's weird about it? It's like, there's like, I don't know, 15 different restaurants over there.
If you want to call them restaurants,
well,
that's a stretch.
15 different places where you can get food, right? 15. And McDonald's, but McDonald's always has
Even
lineups.
places is a stretch. I
Whatever
call
you
it
wanna
a
call-
minuscule kiosk
Yeah, kiosks.
idea of food.
Okay, 15 kiosks where you can get food, but McDonald's always has a lineup, and the other places often are not.
Well,
don't
that's
have
because
anybody.
people are addicted, and
I don't know what it is.
Is this your idea of fine dining?
No, my idea of fine dining
Food
is
courts?
going to Morton's with you with some martinis, but that hasn't happened yet, has it,
Oh,
Marla?
yeah, no.
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 All right, well, it's going to happen one of these days.
Yeah, it will.
Okay. So let's get busy with our next guest. We've got Joe the Investor here. Joe, welcome.
Welcome. How are you?
We are great. We're talking about investing with conviction, right?
That's right.
What does that mean exactly? And why should we invest with conviction? Or maybe we shouldn't.
Okay, so what I mean by that is when most people talk about investing, they take money and put it into a bunch of different things that are different from each other.
Laddering. Would you call that
well,
laddering?
they call it diversification.
Okay.
They buy a bunch of different things,
Mm-hmm.
and whatever happens, they'll get an average return from them.
Right.
Now, the idea of conviction that I'm talking about is rather than do that, buy a few things you know really, really well and put more into each of those. And the knowledge you have will allow you to get better return and better control of your money because you're buying something you understand very, very well.
But how do you have better control of your money if you're investing and really the control is up to the investment company? It's whatever you're investing in. You don't have control. Once you buy, let's say, stocks, you don't have control. especially if you lock in anything long term. Wouldn't you say if you lock in long term, you get more bang for your buck, right?
Generally, it also depends. And, well, even if you're doing a stock, if you know the company a lot more than if you don't, you'll do a lot better. So let's say if it's a company you work at, or an industry you work in, and you see it every day because you're familiar with it, and you buy a company in that, because you're in it and you know it very well, you can find out how good it is. But if you buy something you've never heard of or never seen, you'll get whatever you get, which will tend to be the average if you buy a lot of these types of things.
So does investing with conviction, does that mean really knowing the company, knowing the management team, all that kind of stuff?
Yeah, the more the better. You may not always get to do that, but even if you know the industry well, or the product that they sell very well, that gives you an advantage over someone who's never seen the product, never paid attention to it, or the average person who just buys, say they buy a cell phone because they need it,
Yeah.
versus somebody who makes cell phones or who programs them or who knows people who program them. That allows you to have more insight into
What you're buying.
what's good, what isn't good, how long it will last.
Joe, do you think that is it possible to get a 3.5 interest rate on something these days?
3.5?
Mm-hmm.
You could do it on a bond if you buy it long enough.
Yeah,
Well,
how
about-
long would be
About
long?
10 years.
It's a long time to lock in your money, wouldn't you say? Now, and is that, do you see the interest monthly or annually, or only at the end of the 10 years?
They're typically 6 months.
You get an
They pay
interest
every
check in
6
6
months.
months. Mm-hmm. Yeah, because, last year they were saying the interest rates are going to go up, so don't lock in your money for too long, and that didn't happen.
Yeah, it hasn't happened yet. I still think it can.
You still
though.
think it can. But at this point, people are being advised, lock in something now because it didn't happen. So, in effect, it could go lower. And if if you leave it in the bank, you're getting 0.75 or 1% or 1.5 at ING. But maybe best to lock it into something. I mean, stocks are not reliable necessarily. What's the most reliable stock?
Well, I'm saying the one you know the best. Because if you
Did
know
somebody know Nortel?
somebody did.
But that didn't do too well.
Not at the end.
No.
Somebody made money initially on it.
Yeah.
For so many years.
So,
And then
but you never
eventually-
know what's going to happen. It's really like going to the casino.
Well, it is if you don't know. This is kind of what I'm getting at.
So what you're saying is if you're not investing with conviction, in other words, if you don't know what you're investing in, it is like a casino,
You're
right?
getting an average
So
of whatever everyone is doing.
yeah.
And what I'm getting at is, rather than that, look at something you are familiar with, whatever it is. If it's cell phones, if it's stuff you buy at the store, if it's a company you work at, if it's a company you like to buy, a product you like to buy, or something that your wife likes to buy, or something like that. You know more than the average person knows about whatever that is. And because of that, you'll have better research and a better idea. If it was Nortel, for example, and you worked there, and you saw some things that weren't going that well, you'd probably be selling before the rest of the market did. And so you wouldn't be in that
Like Martha
bankruptcy
Stewart.
scenario.
Yeah, I'm just gonna. Does that get classified as insider trading then? If you
Well, I'm not talking about illegal information, just observation, basically research that
What do
you
you
can
think
find on the street.
Sony was a good company. Now with the breach of privacy, do you think their value as a company is going to plummet?
wait, what happened? I don't know about this story, Marla.
It's been in the news a while, and you're
Whose
well
privacy did they breach?
read. People
Many
who gave their
people's.
personal information to anybody buying PlayStations. and millions of people, their personal information got hacked.
Oh.
And now there's a huge lawsuit. But Canadians, was it just Canadians that got affected by this, Joe?
That I'm not sure of,
Yeah,
but it was
I'm
a
not
lot
sure
of
either.
people.
But, you know, that was a good company, and now this has happened. Do you think that will affect their value as a company?
Probably.
Well, thanks. I mean, the problem is anything can happen.
That's right. Anything can happen.
Even when you're working somewhere and things seem to be good, or you know, I go into the Mac store and I think they're thriving, they're doing so well, and I don't know, is BlackBerry? Who owns BlackBerry?
Rim. Oh, you're.
Okay. What do you think is the best investment right now? Even if I have great conviction in buying a long-term GIC, but that's not what you mean, though, right?
It's not, but for some people that would be the best thing. If you don't have an idea what you want to do, or you don't want to research it because you don't have time or you don't like to do it, that sometimes is the best.
And if you hire an investment advisor, you have to give them 1% of the value of the money.
Mm-hmm.
So you're out that money regardless. Even if you don't make it, you're out.
That's a good point. So, Joe, I'm just wondering, because some people do invest through an advisor. They're going to pick, instead of investing directly in the stocks or in the companies, they're going to, find an advisor who's supposedly an expert, right? Does that count as investing with conviction? If they do a lot of research and find the right advisor?
If you believe what they believe, then you can do that. If you're just taking their word for it and nothing else, but you're not really sure, then it's basically like buying anything else.
Yeah.
So if you have an advisor, but you also like a certain industry or a company, I would say to them, I want some of this company more than the other stuff, and that'll allow me to get an edge over just 5 unknown companies.
So it sounds like it really means taking responsibility.
It means that, and buy what you know.
Yeah.
And if you don't know something, you can get to know it. If you already know it, you can put your money on it. Or if you don't know it, you could say, I don't want to know it, so I'll opt out and go with the very safe cash or a bond, something that's easily explained. And that way you can know where you stand. And sometimes going with the average is fine, because it's better than a bond, say, if you wait long enough. But if you want to get something above that, this is where this comes in. If you're wanting to do the work and wanting to go with something you know more than the average.
Mm-hmm. Now, what's the relationship between investing with conviction and risk tolerance? Because everybody's got a little bit of a different tolerance.
They kind of
for
go
risk.
together. Well, in all cases, I wouldn't put everything in one spot, because something can happen that you don't foresee, but I'd probably put it in 3 spots instead of 10, or instead of 20. And that way, now the risk end of it is, if you, risk tolerance is more of a personal thing. If you can't sleep at night, it's too much, whatever it is. If you're thinking about it a lot, it's too much, whatever that is. If it doesn't bother you at all, and you don't need the money, you could probably buy it. And that's my gauge. And if it's money that you can afford to lose for a few years, then that's fine. But if you have any need attached to that, don't put it in. Because 1 out of 100 chance it might go down, and then you need it, and then you get nervous about where am I going to get the money from. So it has to be money that you can play with, as they say. And if you can't play with it, I'd stick with the cash and the bond.
The mutual funds is a pretty rough ride. They always say you have to be willing to leave it in there a while, and you have to be willing to, deal with the ups and downs. And it's like, it didn't agree with me.
I consider that stuff you can play with, mutual fund, unless it's a money market fund. Even a bond fund, will change with interest rates to an extent. Even that can go up and down 5%, just as a number. And so if you absolutely need the money, I'd even not buy that. I'd stick with a GIC. And then if there's a bit of leeway, you can wait a few years, then I'd move into bonds, mortgages, and then equity after that.
What do you think about the financial companies that only guarantee you $100,000 insurance coverage if you lose that money?
That's for bankruptcy, a situation where the financial institution goes bankrupt. The government steps in and insures your money. If it's an investment loss, they don't guarantee it. If it's a GIC, it's a guaranteed investment, then that's guaranteed by the company. So that's basically a bankruptcy or a systemic failure kind of protection. And it's also good if you have cash, because cash doesn't have risk other than maybe inflation. But in terms of the bank, the only way you'll lose it is if it goes bankrupt. So that's how I would think of that. If you want to guarantee a return, then I'd buy a guaranteed investment product like a GIC. And
But it doesn't pay very much.
it doesn't pay much now, yeah.
I mean, really, you're kind of like between a rock and a hard place right now, unless you're going to do high risk.
You're just saying there's just not a lot of return out there for
No,
people.
there's not a lot of return out there.
For
Yeah.
a guarantee, there wouldn't be, yeah.
Well, in the old days, I mean, you had, and what I mean by the old days is like the late 70s, before Reagan and those guys. But in those days, yeah, you had a good return.
In
But
the
yeah-
80s,
Well, wait. But you had inflation. You had higher inflation, which was eating away from your return.
it depends on how you live and what your overhead is.
Okay, fair enough. Joe, well, what are your comments about that?
About inflation?
Well, about the fact that what Marla's saying, you can't get a good return these days unless you take something really high
Well,
risk.
If it's a guarantee, yeah, you can't get much more than that 1%.
I used to live
And
off my interest. And, I didn't go out and buy a house. I maintained my status quo, and my money was paying for itself. And that's not the case anymore. It's like you might as well keep it under your mattress. Except that you might
Wow.
get 1%.
Or maybe what you got to do.
And 40% of that you pay to taxes.
Maybe
pay
what you got
taxes
to
on.
do, Marla, is invest with conviction. Is that what you're saying, Joe? Because it seems to me, Marla's saying it's high risk, but I think what you're saying is if you understand the company, you understand the environment
can
it's
lower
in,
the
and you
risk.
understand where things are going, that you can invest with conviction in a company that you know a little bit about. It may look like high risk to some people, but the fact that you know what's really going on in that situation means that for you it's not high risk, and yet it's
That's
still high
right.
return. Is that right?
That's right. I mean, I give two examples. If you work for a living and all your money's coming from that job, you have all your money in that job. And if you lose the job, you have a risk of getting nothing. And everybody lives this way unless you have 4 jobs, which is very hard to find time to do. So there is a risk in that, and people do this and it's accepted. And the other example is the businessman who has all his money in his company. Again, now he runs the company, so he has all the conviction because he started the company.
Mm-hmm.
Still, he could lose his money, and yet there's a lot of entrepreneurs out there who do this, and there's people in partnerships who are in the same situation. So this type of risk is common, and I'm taking that idea and putting into your investment and saying, if these people can do it, you can do it with your investing if you have that knowledge. If you don't, then I wouldn't recommend it, but you need to get some advantage in order to say, yeah, I have an edge over the average person. And so, and that way I could lower my risk because I know the product better than most.
Or you think you know.
Or well, you think you know.
What if you only think you know and you don't really know? Like, because as you mentioned, these people that, and it's, the entrepreneurs that are investing in their own business, right? They're taking their money, their capital. They're also taking their labor. and they're putting it into their own business, and maybe they're losing money, and they know more about that business than anybody, but maybe they're biased. They want it to work out, and there may be a bit of an irrational motivation there as well. Can that irrationality translate into when you're investing in a company? Maybe you think you know more than you really know.
That can happen. They call this emotional investing, where you want an outcome, and because you want it, you'll avoid everything that's negative to go after the thing that you want. So if I really like this product, and I really like the product, so I really like the company, so unequivocally it's going to do well. But when you do this conviction, you also have to look at the other angles. If it doesn't do well, why not? If the product is good, what else can go wrong with it? Maybe the management is corrupted. Maybe it sells for a little while and then a better one comes out. Maybe it works for this group of people but not this group. And I think the cell phones, you can see that BlackBerry used to be very big, and now Apple is starting to take its business away, so now it's a different...
Is that because of iPhone?
Yeah, iPhone is much more popular now.
Why do you think that is? I haven't gotten either one yet, but I've been asked by both.
I'll tell you what it is.
What is it?
It is it's Apple does really good industrial design. Their products are well designed, and people like them, and people will stand in line for them.
Do you think one is better than the other?
I'm the wrong guy to ask about that. From what I understand, the BlackBerry's more for the business crowd. The iPhone's more for the kids and the groovy,
That's what I've been
groovy
told
application
as well.
stuff.
But they both have keyboards. One's right on the screen, and one is keys. And now the new BlackBerry has one on the screen as well.
That's right.
But what is the difference if one is... So if you don't want applications, so what? What is really the difference in the end?
Well, they're
what
going to...
gives you the better audio?
Here's the thing. What?
What gives you better audio quality?
Me better audio? This microphone.
No.
See? Maybe we can get you one of those next time. But, everybody's trying to do great industrial design, because the better design it is, in terms of in the way it's evaluated by the marketplace, the better it's going to be, right? And in fact, that's coming back to the investing with conviction. That's one of the things. If you know industrial design, or if you understand how people relate to products, then that's going to give you a bit of an edge in terms of what industrial design companies you might want to invest your money in.
That's right, yeah.
Now, what else do we need to know about this, Joe, today? What are you saying? Are you saying people should just do more research and everybody should invest with conviction? Or what do you want to leave people with to think about this, people who are...
I want to leave people with that there are other ways to invest money other than that typical buy a bunch of things, hold all of them, and wait. And there's another thing I can add. Well, I'll add this, and it can be thought about. If you buy 10 companies and they're all different, all 10 of them can go down, which happens every so often. The market corrections, the crashes, the crises, they do come back up over time, but you have to weather that volatile time where, gee, I lost half my money, do I stay, do I not? Of that.
Shouldn't you buy on the way down? That way you are lowering your average unit price? Well,
if you're buying everything, that's probably a good idea.
Yeah.
If you're buying one or two things, I would say it really depends. Some of them don't come back.
Yeah.
No, Nortel hasn't come back. It's not going to come back.
You can't even get rid of the few shares you have with Nortel. Nortel, nobody wants it.
So the original idea was, what to leave people with. If you have an advantage in something, take advantage of it. If you work in a bank, or you're a doctor and you know about the drugs, or you're a geologist or something like that, and you see things every day, get ideas from that. rather than just buying whatever. You know, if you feel comfortable and if you can. But if you're in it every day and you know, you see it, you'll probably have more comfort with it. You'll know what minerals look like if you're a geologist, and you'll say, yeah, this company has actual minerals. It's worth trying out.
Yeah.
And everyone has some of this, whatever they're doing. And this is an option for people to invest rather than just buying whatever's there and just waiting for all of it to move up or down. And so just something to think about.
All right.
Well,
Okay,
I
Joe.
should invest in a drug company that makes Oxycontin,
Why?
because everybody loves that drug.
Yeah, that's right.
They're stealing it at this point.
Yeah, that's a very good investing with conviction
Yeah, that's investing
policy.
with conviction.
So, okay. Now, Joe, just before you go, because it's been great, but we just had John McCallum in here. Of course, we just had the election. We got a conservative majority government in Ottawa now. How does that inform you in terms of the investment climate as we look forward?
Okay. Well, it's all positive. I mean, first of all, the majority government is perceived as stable by the rest of the world. Before we had minorities, coalitions, an election can come at any second. Now it likely won't happen for 4 years. So the rest of the world sees that as positive. The Canadian dollar will likely go up because that's the perception that comes with it. And people investing in Canada will likely increase due to that stability. So in general, it's good.
Mm-hmm.
And also the Conservative government is business friendly
Yeah.
versus the other parties.
In theory.
So,
in theory.
in theory. And the perception has a lot to do with what actually happens. So if they see a government that's perceived as business friendly, companies will say, well, this is a better place to do business, so let's put more emphasis on Canada versus somewhere else. So I think it'll be generally good.
All right. Okay. Are we going to have the Amero? The unified North American currency? I asked John McCallum. No. What do you think? Good idea?
I don't actually like the idea, but
Yeah.
anything can happen now.
All right. Okay, Joe. Thanks a lot. If people want to get in touch with you, they can pick your brain about this kind of stuff, and not just on the air, but how can people get in touch with you?
So my email is joetheinvestor.today@gmail.com, and I also have a website, www.joetheinvestor.ca, and I'm also on Twitter and LinkedIn, so I can be found in both those places. Twitter is @JoeTheInvestor, and LinkedIn I can be found by search.
Under Joe the Investor?
Under Joe the Investor,
LinkedIn?
or under my name as well.
Joe Barbieri.
Joe Barbieri.
Okay, Joe. All right. Great to have you here. As always, thank you for doing this, and we're going to take a little break. Marla,
Sorry, I had to sneeze.
you got the sneezels. So let's listen to some Brenda Earl, and let's come back, and we're going to have some funny stuff coming up.
Nothing like putting pressure on somebody.
No, don't put any pressure on Marla to perform. We'll be right back.
She brushes past him at the end of a long day. They stare in silence at the elevator door. When he stops her in the hall, she says, I have to stop.